Welcome back. It's still with us on Startup Street. Drip Capital, a digital platform for trade finance, has secured $113 million in new funding. This includes $23 million in equity from Japanese institutional investors GMO Payment Gateway and Sumitomo Mitsui Banking Corporation. It also includes $90 million in debt financing led by the International Finance Corporation and East West Bank. The firm will use the funds to accelerate its expansion plans and enhance product offerings. Joining me now to discuss this further is Pushkar Mukewar, the co-founder and CEO of Drip Capital. Pushkar, thank you so much for taking time out and being here with us on Startup Street today. You know, like I said, you're a leading digital platform for trade finance. Before we get into the fundraise, can you elaborate on your key offerings and the sort of efficiencies you're bringing in for your customers?
Sure. Thank you for having me on the show. So we are sort of a digital trade financing platform focused on small businesses, which are primarily engaged in cross-border trade. In terms of our offerings, I think access to credit is one of the biggest challenges which our small business customers face. And I think if you look at it historically, traditional lending institutions haven't really focused on that segment of the market. Through our collateral-free trade finance offerings, we essentially enable that credit access. We specifically offer two kinds of products. So one is sort of an invoice discounting or a receivables financing product where SMB exporters can get, immediately paid for their outstanding invoices. And we also offer a supply chain finance product where essentially SMBs can get extended payment terms, and this is what allows them to free up the capital locked up in their working capital cycle and invest that capital to further their growth. I would say, given that we've built a very large base of suppliers and buyers on the platform, we've also now ventured into more trade facilitation offerings like Forex, as well as a marketplace offering where we are able to connect suppliers with buyers and buyers with suppliers. These are some of the newer offerings we are getting into.
Absolutely.
And your specific question on efficiencies, I think, most of these customers are either underserved or unserved. And actually by enabling or automating the underwriting and financing of these trade transactions, we are not only enabling access, but we are doing so in a fast and efficient manner, which is the need for a lot of these SMBs who we work with.
Sure. And, we'll discuss your new offerings in detail in just a bit, but you've raised this $113 million in a combination of both equity and debt. Can you sort of quickly tell us how you plan to spend these funds?
Sure. I think debt for us is like raw material, and I think that is what we will continue to use to scale up the trade transactions which we are originating and financing on the platform. And in terms of equity, I would say that this was again, more an inbound interest. So the idea is that we will use some of the funds, of course, to essentially invest in some of these newer offerings. But primarily, I think India and US are the key markets for us, and we would look at scaling up our offerings and scaling up our customer base in these markets. And we're pretty excited about the two markets. I think there's a lot of potential in India with what the government's plans are also in promoting exports. And I think we see a lot of opportunity for us to just continue to scale up our offerings and scale up our customer base in these markets. Yeah.
Right. So eyeing the India and US market as your key markets, you also claim to have quadrupled your revenues over the last 2 years, right? So give us a sense of where you are at in terms of your revenues. What about profitability, and what's the revenue mix between India and the other geographies?
So in terms of the transactions on the platform, we do more than $2 billion of transactions annually. In terms of US and India, or I would say India is a pretty significant market for us. Almost 60% of our business comes from India. 60% of our revenues are also from India. Second market being US, and we also have some presence in LATAM. We did achieve profitability earlier this year, and I think the idea would be to continue growing the business sustainably. And yes, last 2 years have been great, and I think we want to continue that growth trajectory over the next 2 years as well. And our plan is to double the business from here on. Yeah.
So plan is to double the business, and you've hit that, all-important profitability mark earlier this year as well. So, as you sort of elaborated on top, part of the funds that you've raised will go towards new products. So what's on the anvil? And like you said, you've launched this Forex solution in partnership with Barclays, right? So what's the demand you're seeing for these new, offerings?
Yeah. So the genesis of that is that, we work with a lot of small businesses, and I think being close to these businesses, we are identifying the other challenges which these businesses have when it comes to just managing their trade better. And one such offering was the Forex offering, which we recently launched. The idea is that, we move more than $2 billion on the platform, and many of our small business customers are working with their banks to essentially convert the Forex into local currency and paying hefty charges, as well as the pricing oftentimes is not very transparent. By essentially partnering with the bank, we are able to offer a more transparent, cost-efficient solution on the Forex side. The other area which I think we are getting pretty excited about is that because of the network of suppliers and buyers we have, we are also looking at how we can leverage that network for suppliers to connect with buyers and for buyers to connect with suppliers. And, and that is something which we are pretty excited about. And we look at scaling that business up also as we think about the next 12, 18 months. Yeah.
All right. And if you could quickly tell us, considering that 60% of your business comes from India, would you look at shifting base back to India?
So I know there's a lot of talk around a lot of companies kind of moving base to India. I think we've just started the exploration around that. We're engaging with advisors. I think, of course, it's not a straightforward process. So we do need to consider implications from a regulatory and tax standpoint. But yeah, I would say that, given India is a big and important market for us, longer term, perhaps moving base to India might make sense. But we're just very early in that process of exploring, how and when.
All right, so exploring your options there. All right, Pushkar, thank you so much for joining us on the show today, and we wish you all the best going forward.
Great, thank you.
All right.